S&P 500 closed above 5,000 for the first time ever last week. It rose for 14 out of the past 15 weeks. This is the best rally streak since at least 1972, the best streak in 52 years. AI stocks are powering through the roof, led by big names like NVIDIA, which rose more than 6x in just over a year, and over 50% in just 2 months YTD. Are we in a dot-com style bubble? Should we brace for market collapse? Let's try to find out in this video. Since last November, when Powell began the policy pivot through forward guidance shift and displayed strong confidence in the potential for achieving soft landing, stocks rallied through the roof, led by the M7 tech stocks. Amid the AI craze and soft landing hopes, the recent stock rally has been so strong that even Wall Street's most bullish figure, fund Strat's Tom Lee, has presented a view that S&P 500 can soon face around 10% contraction, despite its long-term potential to rise even further. We can see from a deeper look at the monstrous 2020 pandemic rally, e.g. the sudden correction in September 2020 before resuming the rally, that when stocks rally too much too fast, it can see a sizable correction in the immediate short term, even if there is no reason for decline and everything in the economy is as strong as ever. Especially with the higher than expected CPI print for January 2024 that just came out that surprised Wall Street, the market's recent rally seems especially shaky. Is the current market in a dot-com style bubble that is about to collapse? Let's take a look, step by step. How can we spot a bubble? Are we in another bubble right now in early 2024 amid all the AI craze? Or are the skyrocketing valuations justified by the company's phenomenal growth and spectacular earnings? I believe it all comes down to whether it is just too much. In this analysis, I will use NVIDIA as the main representation of the recent tech stock rally. But please keep in mind that I'm just using it as the primary example to refer to the overall market rally. So is NVIDIA's stock rally of more than six-fold in a single year just too much? Some say it is, while some say it is fully justified by NVIDIA's phenomenal growth and dominant earning power. In trying to answer this question, let's first review the basics of why a stock's price can go up. Why does a company's stock price go up? And why do some of them, such as NVIDIA and Meta, rally especially strongly? At the most fundamental level, it all comes down to supply and demand. When many people want to buy the stock relative to the number of shares available for trading, the stock price naturally goes up. Then what makes people want to buy a particular company's stocks? There are many reasons, but the most basic reason is that its business is doing outlandishly well. NVIDIA's stock price is rising because its AI chip business is doing outlandishly well. When a company's business is doing so well, making lots of money and growing extremely fast, and especially if it is the top player in an industry that is expected to change the entire world order and paradigms, e.g. AI. Everyone wants to get a share of its stock, so its stock price skyrockets. If a company, such as NVIDIA, is doing so well and growing so rapidly in the new hype industry, does its stock price have no limits? Think back for a second. How everyone felt about Tesla post-pandemic in its heyday as the leader of EVs, when its stock price seemed to have no limits. Didn't almost everyone want in on Tesla stocks and believed it could never fall? Did Tesla suddenly become a bad company? Did the paradigm shift for the EV and self-driving industry? Only when compared to the extreme expectations of the market during its heyday. There is no doubt Tesla is still the top player in the EV industry. Elon risk? Perhaps. What matters is that Tesla was once thought invincible, but now, not so much. What about Cisco during the dot-com bubble? NVIDIA's recent rally is often compared to the spectacular rise of Cisco during the 90s. Cisco was the leading internet stock amid the internet craze of the era. Its earnings and business outlook, they were so strong and growing in high double digits each year. So yes, Cisco's spectacular earnings and outlook were the fundamental reason its stock price skyrocketed. Let's take a look at Cisco's stock price movement during and after the dot-com bubble. And here are the annual revenue and net income data for Cisco from 1996 to 2001. Clearly, the stock price rally was based on the strong growth of Cisco's revenue and earnings amid the spectacular growth of the internet industry in the late 90s. However, there came a moment when such growth rate began to slow, and the mood of the overall market suddenly shifted. When such shift came, the spectacular valuation that was accumulated was spectacularly balanced out. NVIDIA's recent stock price rally has been phenomenal. And like Cisco during the 90s internet boom, or perhaps even more, NVIDIA's recent growth in revenue and earnings has been beyond spectacular. NVIDIA's recent earnings growth after the release of ChatGPT in late 2022 seems even more spectacular than Cisco's between 1998 and 2000. So there is no denying that NVIDIA's growth is truly spectacular. However, with the market's expectations already so elevated in response to NVIDIA's such fascinating growth, its capacity to disappoint will likely increase. While the underlying reason for a stock's rally lies in the strength and growth of its business, extreme movements are formed when an extreme forms in the mood of the market and its participants. When everyone wants in on a stock and believes it could never fall, it will keep on going up as if there is no limit to it. But like everything that has had its time, there is always a limit, no matter how unlikely it seems, at least in the near term. As people's expectations go up, the capacity for disappointment also goes up tremendously. Human beings are masters of adaptation. In a matter of no time, something that felt so amazing and futuristic will very quickly become old, and we will keep wanting to see more and more new, better things. Every time I rewatch the 2007 iPhone launch keynote by Steve Jobs, I am astonished by how everyone reacts when Jobs first demonstrates smooth scrolling on the iPhone. The moment scrolling was demonstrated with the flip of a finger, everyone clapped and shouted with excitement in a standing ovation. From current perspective, it's simply astonishing to see that people were so amazed by something so obvious. Also, see how fast the world is getting used to the amazing generative AI capabilities of ChatGPT. While it is indeed still an amazing new technology capable of completing tasks only thought possible in sci-fi movies, users of ChatGPT are already beginning to want even more. While such fast adaptation and new demands by human beings are what drives the rapid growth of advancement in technologies, if the advancement falls behind the expectations of the people, disappointment will follow. There is no denying that the future of NVIDIA seems extremely bright, considering its dominance in the GPU arena and GPU's increasing importance in the AI space. However, given the hyped-up expectations of the current market, where technically everyone agrees of NVIDIA's dominance and expects it to continue to exceed the market's increasing expectations for its growth, the capacity for disappointment increases. Just as people suddenly became disappointed by Tesla on concerns over slowing EV growth and growing competition, and by Apple on concerns over its China business, there will likely come a day, sooner or later, when people will feel disappointed toward NVIDIA and other AI stocks that are currently rallying like there is no limit. NVIDIA and the AI boom seem invincible for now. What could possibly make this mania stop? Disappointment doesn't require much. If NVIDIA's revenue and earnings growth start to slow a little bit, say to 10 to 20% growth a year, that could be enough to hugely disappoint the market. The market had been amazed by its outsized several-fold jump in revenue and earnings in just several quarters, but slower growth could likely disappoint the elevated expectations of the market. This is already taking meaningful stage, with AMD's chips rising as alternative options, and OpenAI's Sam Altman recently announcing OpenAI's plan to grow its own AI chip capacity amounting to $7 trillion. Just as Tesla's EV hype diminished with rising competition, NVIDIA could face similar situation despite its dominance as the clear market leader. The reason big tech is raking in so much money is that consumers are still very strong. While it's all about AI, the reason for AI's growth is that people are excited and spend money on it. The underlying reason for the strength of any business, no matter how high-tech its business is the strength of consumers. For example, Meta has recently made an amazing comeback with its earnings skyrocketing. Given that virtually 100% of Meta's revenue comes from AAD revenue, we can see that the overall economy's ad spending by global companies has been very strong, which in turn means consumer activities have been very strong. If recession finally comes amid recent increases in corporate job cuts and other financial risks lingering around, such as commercial real estate risk, consumers will lose spending power and companies will earn less, spend less on ads, causing Meta's earnings to slow as well. How about NVIDIA? Its chips are soaring in demand because people are getting crazy about the new hype around AI, and big tech companies that offer these AI services to consumers need more and more of NVIDIA's high-end AI chips to increase the AI computing capacity. If consumers lose spending power, the AI hype will diminish and less compute capacity will be needed, and thus fewer chips needed, at least in the near term. While NVIDIA's prospects seem unlikely to weaken anytime soon, there are definitely risks lingering for possible disappointment, and when they do come, its elevated valuations can balance out significantly. History may not repeat itself, but the excitement-disappointment cycle of human beings has always repeated throughout history and will likely make sure to repeat in the future. It doesn't mean AI will all of a sudden fail to dominate the new world paradigm. There is no denying that it will most likely do so, but it comes down to the immediate status of whether it is too much, at least in the short term. When the stock price growth represents a market-wide expectations of its bright future at least several years into the future, any trigger that causes an immediate shift in mood that doesn't fulfill the immediate realization today of those stretched expectations, no matter how minor, can be enough to suddenly bring everything crashing down. Dot-com bubble formed in the 90s because of the internet hype. Internet did eventually change the world, but that didn't mean the top internet stocks of the time, such as Cisco and Microsoft, kept rising forever without serious correction, even while their revenue and earnings still fared well. Roaring 20s arose due to the hype around the paradigm-shifting technologies of the time, including automobile. Automobiles did change the world, but that didn't mean stocks continued rising forever. Instead, Great Depression is what followed. Anytime paradigm-changing technologies come about, the degree of hype surrounding them and the degree of related asset price rallies have been beyond amazing. And each time before the day of reckoning finally came, most people thought it would go on forever because they were indeed world-changing technologies. Despite lingering risks such as commercial real estate risk and serious geopolitical risks, stocks have been rallying since last November as soft landing hopes swept through the market. But now, with the release of January CPI prints that came out broadly higher than expected, even the basis for recent soft landing expectations is now under serious risk. Everything is okay until it is not okay. Will NVIDIA stock price keep going up? Only until the current all-in on AI mood persists. When the mood suddenly shifts, it will all come crashing down. That doesn't mean NVIDIA will suddenly become a bad company. It doesn't mean AI will not change the world. It most likely will. But even if it stays as strong as ever and AI does change the world, there will come a day in the short term when the ever-increasing expectations of the market will become so high that the reality will shift to disappointment before it can resume back up. And with the inflation risk rising again on one side and recession risks also rising on the other, that shift in market mood can come a lot sooner than we expect. Please subscribe and like this video if you like the content. And please share your own market views in the comments below. I would love to hear all of your opinions, whether you agree or disagree. We all game through the wisdom of others. May the returns be with you.